Tax system. A tax system is a framework established by a government to collect revenue from individuals and businesses in order to fund public expenditures and services. Tax systems can vary widely between countries, and they are typically governed by a set of laws and regulations. Here's a comprehensive overview of tax systems.
1. Types of taxes.
Income tax, collected from individuals and businesses based on their earnings. It may include progressive tax rates where higher income earners pay a higher percentage of their income in taxes. Corporate tax, levied on the profits of businesses or corporations. Rates can vary, and some countries offer tax incentives to attract investments. Value-added tax, VAT, a consumption tax collected at each stage of production and distribution. It is ultimately paid by consumers and is common in many countries. Sales tax, similar to VAT, it is a tax on the sale of goods and services. However, it is typically applied at the retail level. Property tax, levied on the value of real estate properties. It funds local government services such as schools and infrastructure. Excise tax, applied to specific goods like tobacco, alcohol, gasoline, and luxury items. It is often used to regulate consumption and fund-related programs. Capital gains tax, taxes on the profit earned from the sale of assets such as stocks, real estate, or investments. Inheritance tax, estate tax, tax on the transfer of wealth from one generation to another, typically imposed on large estates. Payroll tax, collected from employees and employers to fund Social Security and healthcare programs. Customs duties, taxes on imported goods, which can be used for revenue generation and protection of domestic industries. 2. Taxation principles. Equity. Taxes should be fair and equitable, with those who can afford to pay more bearing a higher burden. Efficiency. Tax systems should minimize distortions in economic decision-making and administrative costs. Simplicity. Tax rules and compliance should be straightforward and easy to understand. Neutrality. Tax systems should not favor one economic activity or sector over another. Transparency. The tax system's rules and processes should be transparent and accessible to the public. Flexibility. Tax systems should be able to adapt to changing economic conditions and societal needs. 3. Tax administration. Tax collection and administration are typically managed by government agencies responsible for tax enforcement and compliance. Taxpayers are required to report their income, assets, and liabilities accurately and pay taxes according to the rules of the tax system. Tax authorities use audits, penalties, and incentives to ensure compliance. 4. Taxation at the international level. International taxation deals with how taxes are levied on income and assets that cross international borders. Double taxation treaties between countries aim to prevent the same income from being taxed in multiple jurisdictions. 5. Taxation and economic policy. Tax policy can be used to achieve economic goals, such as promoting economic growth, reducing income inequality, and funding public services. Tax cuts may stimulate economic activity, while tax increases can provide revenue for government programs. 6. Challenges and controversies. Tax evasion and avoidance can reduce government revenue, leading to concerns about fairness and equity in taxation. Debate often centers on the distribution of the tax burden, with discussions about whether high-income individuals and corporations pay their fair share. Complexity in tax codes and rules can create compliance challenges for taxpayers and administrative burdens for governments. Balancing tax incentives to stimulate economic activity with the need for revenue generation is a constant challenge. Tax systems play a crucial role in government finances and influence economic behavior and social outcomes. As a result, they are a topic of significant public policy debate and scrutiny. Understanding the principles and mechanisms of tax systems is important for both individuals and businesses to meet their tax obligations and make informed financial decisions.